Hi everyone and welcome back to today's morning report chart appraisals on Wednesday the 10th of December with me, Rich Perry, market analyst at Hand Tech Markets. The final chart I'm going to look at today is gold. And again, I have to hold my hands up and say I got this one a little bit wrong. Caught on the wrong side yesterday of this big dollar correction that played out in dollar yen and gold. Big flight to safety away from the dollar, and gold spiked higher. The move above 12.21 certainly gives the near-term impetus to the upside. Continues to play out this rebound, although I'll just zoom out and we're back to this big downtrend. That big downtrend that has been in place since late 2012, I think it's October. That remains intact, and it's just rallied back towards that downtrend. So how do we think this is playing out? Well, initially the downtrend is staying intact, and I'm going to get rid of that now. Sorry. The downtrend has stayed intact, and initially, obviously, we're looking a little bit more positive on this gold chart, with the momentum indicators starting to move more positively. But I think I'm not going to turn bullish, and I know this is probably me sort of maybe being a little bit arguably sitting on the fence a little bit in terms of my call, but I'm going to stay in the bearish camp still until that reaction high at 12.5520 is breached. I think that the strength of this big downtrend that we've seen, and the fact that we've got that reaction high from October at 12.5520 would, for me, say that we're still not yet out of this bear phase. I think this could still just be a bear market rally within this big downtrend that we've got, and until we see a break of that 12.5520 high, I think I'm going to stay within that outlook. Also, we're still trading below the 144-day moving average, which is this big black line. And again, I'll zoom out and I'll show you that that is, on a long-term basis, a very significant basis or gauge for this chart. In a trending scenario, in a trending environment, that is a very good gauge. It hasn't necessarily been so for the first half of this year. And obviously we traded away from it considerably in the last few months, but certainly as a historic basis of an indicator, I think it's a very good one that obviously needs to be still watched, and that is at 12.53. So this so we're still trading underneath that. So again, generally I'm sticking in the bear camp. Just the fact that we've had this sort of bullish rebound within the bear downtrend. Not getting too worked up yet about turning bullish on this one. Certainly within this big downtrend. Anyway, I wish you good luck in your trading. The initial support comes in at 12.21, which is that breakout high. Old resistance becomes new support, and that is shown on this intraday hourly chart. And then subsequently 12.1450 is the next reaction within that phase. So a couple of supports for you to work with, and if you started to lose a bit of momentum to the upside, which already we're seeing actually on this intraday chart, we've seen the stochastics bearish divergence, RSI bearish divergence with a failure swing, which is interesting, and already, yes, we're losing a bit of momentum. So let's zoom in here. If we lose that support at 12.2675, which is a very minor intraday support, then we could well be regaining the downside impetus on this intraday chart. So very interesting on gold. Anyway, I wish you good luck in trading on gold today, and I'll speak to you tomorrow. Thank you.